questions that have come in that I was waiting till this slide to answer. One of which was what happens with the tax status. For an 100% S Corp ESOP, obviously you have a tax advantage. And so what you have to think of is how you actually structure this investment. So there are structures out there that allow us to maximize that tax benefit while allowing for a minority equity investment. Now, you're still going to introduce some leakage from the form of taxes, but what we're trying to do is minimize that. And then from the investor side of things, when you think about that tax favorable situation, and you think of how much capital do I actually need to invest, and so the calculation becomes a little bit different. Let's say an investor was going to earmark $20 million for a company. 10 million of that is going to be the initial slug to buy shares. The remaining 10 million would be kind of that ongoing growth capital. Well, with an ESOP, you have another capital partner, particularly S Corp ESOPs, which is the U.S. government. And so a minority equity investor may not need all 20 million. That might be a $15 million investment to get that same return, potentially even from a dollar standpoint, because now we're putting more value on the strategic partnership and the more beneficial use of the excess cash being generated off of the ESOP. And so you can certainly manage the tax leakage, but it's something to consider. From a repurchase obligation standpoint, this question came in earlier and we addressed it a little bit, but as you grow the business, your repurchase obligation gets larger. The more value that we have in the ESOP, the more my repurchase obligation grows. And so we certainly have to manage that and understand what that looks like. Kind of back to our comment on, you may need to get a repurchase obligation study more often because that exponential growth can have a really unique impact on cash flows, not only while the equity investor is in place, but maybe after they've exited as well. From an investor standpoint, what are the exit opportunities? There's certainly just the sale of that stake back to the ESOP. The ESOP actually acts as kind of a stalking horse buyer waiting to buy those shares back. The other option is potentially through a recapitalization in the form of debt or a sale to another minority equity investor to take that next level of growth once those return dynamics have been hit. Again, from the cash standpoint, the tax benefits, some of that gets consumed by your repurchase obligation, but they're still there. And then there's a large focus from the investor side on the sustainability of the ESOP and understanding cash flows outside of your typical operations. Sometimes it's a foreign concept. So I think when we think back to our process, if you're an ESOP company looking to raise minority equity capital, that's likely going to require more due diligence as you educate those investors into those uses of cash flows. But again, if you're not an ESOP company, you're paying taxes. And so the cash is still going out the door in some fashion. But finally, for an ESOP, from a governance standpoint, Jamie's alluded to this, you're likely going to have to add this minority equity investor to the board, have them have representation on the board. They will provide a partnership as far as strategic vision and making sure that they are achieving their return hurdles. But again, that should be a benefit to all participants. I think particularly in an ESOP, the cultural fit is supremely important. Most people who chose the ESOP as their exit strategy were very concerned with the culture and maintenance of their legacy. And so you need to be very, very diligent in who that minority partner is, because you don't want to lose sight of that ultimate vision of your ESOP. But I think bottom line is, can an equity investment work within an ESOP? It absolutely can. In fact, I think there's a lot of runway from both an ESOP and an investor side that this could be a unique vehicle to achieve returns and grow employee ownership beyond just kind of steady state growth of an ESOP itself.